conversation about half an hour ago with this broad question. What do you think the worry is for Indian investors right now? Is it that FIIs may not have come with the force that was expected once the trade deal is inked? Do you think some of the kind of returns we've seen in the last 1 year is putting off some part of investors? How are you seeing the scenario right now?
So I think clearly, I've been saying this, that the biggest driver for the markets is going to be the earnings growth. And if we look at the, the quarter just went by, I think the momentum has still not maybe picked up on a broad-based manner. We have seen maybe the downgrades getting over, and most of the companies have met the lowered guidance or the lowered expectation, or maybe broadly have performed well. So I think eventually 2 years of low base, I believe, should also create more opportunities for growth going forward. As far as the macros are concerned, I am right now slightly more positive, given the last 1 year. Changes which has happened in terms of the taxation regime, the GST, the trade deal taking place. So I think all of the most worries are sort of now fallen in place, and I believe that these all should start feeding into the earnings growth eventually. But till the time we don't see growth, I think that's going to create some amount of nervousness on the street is what I feel. But my long-term view, remains positive. I feel that the slow growth period may be behind us, and eventually we should start gradually seeing more uptick. There's one more worry, by the way. I think the AI is sort of pulling down most of the participants globally as well as in India. A lot of concerns have been raised, and I think it's difficult to right now call out how things are going to shape out, because the bigger fear is that what kind of impact will it have on the employment overall. And I think it's difficult to predict now. We are just hoping that it creates more, the quantity of work increases, and that provides more opportunities.
No, so I just want to drill down a bit on what you are saying in the context of IT stocks. We saw some optimism when one large player came and laid out their AI outlook, their tie-up with the makers of Claude, etc. And that seemed to have fizzled out very, very quickly. On balance, do you think Indian IT services are going to make the cut when it comes to this AI transition, or will there be only few good men left standing?
I think clearly the ones who are the companies which are going to upskill themselves and they are going to make themselves relevant. I think they are going to not only survive, but maybe they'll see much better business outlook. And this is what is coming out yesterday. The large IT service company, they had their AI day, and they also called out that a lot of their own clients and their business, they are seeing almost 80-90% of their business which is embedded with AI. So I think companies are moving up the scale. I think most companies who want to survive, they will ensure that they have ramped up their AI skill set, and eventually as the cost of the technology becomes more and more affordable and low, I think it is going to only mean that a lot of the enterprises globally will have to have AI into their applications, and which is when I think a lot of that quantum of work will increase, and that will give maybe opportunities for the IT companies out here. While it's very difficult to lay out a scenario, but that's the thought process I am going on right now. I'm not particularly very negative about the IT companies. At maybe right valuations, there is merit in actually looking at some of these companies from that medium-term perspective.
Okay. Vinit, good morning. This is Hiral on this side. I mean, that's with regards to IT. How are you looking at the small and mid-cap space from here on? Because what's happened is we've seen peak valuations that have come in. Are you seeing valuations which are normalizing from the expensive zone of what, 40, 46 times a couple of months ago, or a couple of years ago, I would say? And are you seeing any margin of safety that could come in over here, taking into consideration that the normalization is coming in?
Purely from the valuations perspective, both the small and mid cap, they have definitely corrected, and a lot of the froth which was seen maybe a year and a half back, I think that has actually gone away, both in terms of absolute correction and also in terms of the time correction, which the segment has seen. And specifically, but when we actually look at the absolute valuation, I won't say that they are at the absolute attractive price points, because small cap traditionally, let's say, used to trade at a discount to the large caps, which they are still at a premium. Mid caps are they have been at a premium and they continue to trade there, but they're that very expensive zone that has moderated quite a lot. And in pockets, actually, we are seeing that there has been good correction. So if you actually pick up this whole capital goods, engineering, power category, I mean, I have seen that a lot of stocks have seen decent correction out there, and the outlook for them is not, it's not as bad as the stock price corrections have sort of shown. So I believe there are pockets which one can definitely look at. Just going by the bifurcation of the results which went by, clearly we have seen that the small caps have outperformed both the mid caps and large caps in terms of the earnings growth, and mid caps have also generally outperformed the large caps. So I think in the broader market, the earnings has shown much better improvement as compared to the large caps.
So in this kind of a scenario, Vinit, where are you seeing bargain hunting coming in? I mean, is it the high quality names? Is it the cyclicals or the defensives?
I would say, as I mentioned, one pocket could be the capital goods companies which are linked to the power value chain. There, I feel that the valuations are okay. I won't call them really screaming buy or very attractive price points, but still, I think from the point they were, I think the valuations looks pretty palatable out there. I would say that to reiterate, the IT sector looks well valued today, and maybe 5-10% more correction, I think it will look extremely cheap in terms of the valuation points. A lot of the consumer packs, X auto, so consumer durables which have not done well, building material which have not done well. I think these are pockets which, because of the season was not great last year, I think there could be mean reversion and seasonal positive impact which will be seen, and those are the pockets which we are sort of thinking about. So broadly, consumer durables, engineering, so to say, IT sector, and maybe at some price point, the banking sector is also, which is actually looking good from the medium-term perspective.
Vinit, you spoke briefly. I think you just brushed upon what we saw in terms of earnings. Now that this is firmly behind us, would you say that there are bright spots and turnaround stories that you are seeing? Or what looked optically good was a lot of base effect with an improvement back to mean for some of these companies?
So I think the turnaround looks more visible in some segments which were actually linked to the, let's say, the international exports or exports facing, and particularly the US geography. And from that perspective, maybe the textile companies or the chemical companies, not broad brush all the companies, but I think specifically the ones which were having export the US as one of their key markets. The auto ancillary is something where we are seeing a lot of activities taking place. The great excitement comes when we look at some of these auto ancillary companies and the way they have diversified into supplying to the airline industry, supplying to the electronics and manufacturing. So I think these are huge opportunities which these companies have actually diversified into, and that will mean that their growth path will look much more stable and stronger going forward. So I think these are the real pockets where we could see, like you mentioned, turnarounds from where they were, and not just from the low base as such.
And just to come back to IT, some of these companies available at most attractive valuations in maybe the last decade. Is there anything that you would look at right now? You would wait for this AI dust to settle?
It's a very difficult call, but just purely from the valuations perspective, Tamanna, I think it makes sense to start nibbling into some of these names, is what I feel. And I clearly, also believe that the noise level is going to mean that the stock price don't create enough returns generation opportunity very quickly. But I think one will have to remain patient and see how these companies eventually, show their earnings on a quarter-on-quarter basis. So I think that's how one should sort of think about looking at the IT sector as such at the moment.
Okay, so are you saying, we need in terms of IT, that the participation with regards to Indian IT players when it comes to this AI-led rally is pretty much limited right now, and the leadership on that front is probably driven to other stocks in other countries? What will take anyone to come back to the Indian IT players? Because the performance has been pretty much decent if you see in terms of your return ratios for IT as a sector since COVID. Now it's about the stocks playing a catch up.
I think interestingly this year it has actually started on a note where even the international companies, all the hyperscalers, the cloud company which actually called out and which led to this whole fall in the IT. I mean, their stock price also actually reacted downwards. So I have not seen many of these companies gaining, except maybe some of the hardware manufacturers out there which are still doing good. But most other components of technology globally has seen cuts starting this year. Our companies, you're right. I think from their core numbers, their capital ratios, and all those, I think those are very stable and strong. Cash flows are strong, so that's not a question at all. It is all about the growth, the risk of the terminal value in the minds of investors today. Because if somebody calls out that your 2 years of work can be done in 1 week or 10 days, I think that creates that fear whether the IT companies will remain relevant or no. So I think the big call here would be that whether the whole IT application rollout as it happens globally, with most corporates being forced to deploy that for increasing efficiency, whether our IT companies will remain relevant. And I actually go back here when we had, I mean, definitely the AI is a much bigger transition, but even in the past when we had this cloud digitization, the same questions were raised and our companies actually proved themselves. So I would say that maybe this is a bigger transition and our companies will require that much more efforts to be made to reskill and move up the curve. And then I think for them the opportunities can come through.
But not for all. Any survivors or winners that you have spotted? I know you'll not give me exact stock names, not asking for that, but just how you're looking at it.
No, so I think, you can look through our portfolios, what we are, and frankly, it's very difficult for us also to right now judge. We may have our views based on some data points, but I think things could change very quickly and fast out here. So I think just go by the leading companies, the ones who have done well in the past in the transition. I think those are the companies to go by.